A strong first quarter for China's economy, growth topping estimates ahead of any tariff action by the United States. For more on the story, here's Wang Menjia.
A good and steady start. This is how a Chinese official described the state of the national economy in the first quarter.
The gross domestic product, or GDP, in the first quarter reached 31,875.8 billion yuan, up by 5.4% year-on-year, which is stable and improved.
As an important economic indicator, China's value-added industrial enterprises above designated size went up 6.5% year-on-year. Meanwhile, residents' income increased steadily with a nominal growth of 5.5% year-on-year. Consumer price and employment were generally stable. The total retail sales of consumer goods reached 12,467.1 billion yuan, up by 4.6% year-on-year. Investment in fixed assets remained stable, in which investment in infrastructure grew by 5.8% year-on-year.
Okay, let's dive into this good news about China's economy. For that, we're joined by William Li. He's the chief economist at the Milken Institute. Good to see you again, William. It's been a few days.
Thanks for having me, Sean.
So how did China's economy manage to outperform expectations in the first quarter of this year? And what role do you think consumer spending is playing in driving this growth?
Actually, Sean, these are really good numbers that came out, surprisingly good. The retail sales numbers are very strong. Consumers seem to be having a lot of personal income to drive their consumption. And really, the big surprise to me is this growth of exports, 6.9% year on year. Now, granted, a lot of that is anticipatory buying of Chinese products in front of the tariffs to come. But this is a great place to start the year.
Give us a sense for how you think the current economic policies are supporting this domestic demand. This is something China's really been pushing for.
It's without a question that the domestic subsidies and incentives for Chinese citizens to trade in their white products, their consumer durables, and to really upgrade all of the stuff they have at home is working, because that's accounts for a lot of the boost in consumer sales and retail sales. The fear I have, of course, is that we're stealing from the future. That is, these are purchases that people would have made tomorrow, and they're making them today. And what do they do tomorrow? That's really the key to the GDP outlook.
Yeah,
but right now,
I'm sorry.
The data really show that the consumers have really responded well to the stimulus packages that the government has put in place.
You know, I want to dig a bit deeper in how the government is balancing efforts to sustain this growth, because they're going to be navigating, thinking, planning for, as best they can, the tariffs that are out there floating around and will come, may come, could come in a very punishing fashion. How do you plan for the future? And I don't want to throw cold water on these good numbers, but do you think it's out there?
Well, I mean, I am a part of the dismal science, right? So it's my natural tendency to throw cold water on stuff. But even me, as much of a pessimist as I am, it's very hard to see a lot of downside to what the policies have been and their effectiveness that have been put in place. I think what China needs is more of the same. More demand-side stimulus, more reassurances to households. They have the income to spend, and therefore they should spend it. So the government really has to do a lot more to guarantee that the wages that people are getting are going to stay that way, the jobs they have are secure, and the wealth they have in the property market will come back. Those are the policy actions that are being put in place now. The government deficit is being pushed up from 3 to 4% of GDP. Those are all good signs and measures that are well taken to shift focus on the demand side. The supply side has been doing well for quite a while now. Now it's time to focus on demand.
Okay, let me give you a chance to jump back into that pessimistic mode for you there. Because if indeed the U.S. pushes through these tariffs, and knowing how much the United States buys from China, what could that do to the overall bottom line? Would we see these good numbers moving forward?
I think one thing that we have to remember is that China is much more dependent upon its exports for GDP growth than, say, the United States is. So the tit-for-tat kind of tariff discussions we've been seeing in the news, it really will hurt China more than the U.S. because 15% of GDP, a good chunk of GDP is really devoted toward exports, and not just exports to the United States, but exports to the rest of the world. So what it doesn't sell to the United States, it'll have to find markets in the rest of the world, and that's where you're going to find some resistance. And as far as the fixed investments, fixed asset investments in China going, those are doing very well, and they're being pushed into the right areas, the high-tech sectors that President Xi wanted to develop for China to go into the 21st century with, to get rid of some of the low-value-added stuff, to let them go to other countries. But there again, the tariffs will come back to haunt China, because even though many of your neighboring countries are benefiting from the exodus of the low-value-added industries, they're being treated as proxies for China. So the transition that President Xi wants to high-value-added, high-tech industries may not go as smoothly as he hopes.
Well, let's talk about ways China is working to diversify its trade and economic partnerships, trying to reduce this reliance, if you will, on major markets like the United States. For example, what President Xi is doing in Southeast Asia right now, cutting massive deals and continuing to hammer away at, look, we want to be a responsible superpower. We want to continue to work with you.
And in fact, we've talked about this in the past, about the Belt and Road efforts that China has put in place to not only go to the neighboring Asian countries, but spread its productive network into Eastern Europe as well, which is a way of a backdoor into Western Europe. So I think China really has a lot of irons in the fire right now. But the key is to get a good reception on the other side. Are these countries going to welcome the excess amount of exports that they're going to be getting because the Chinese companies will not be able to sell in the United States? That's going to be a very thorny diplomatic case to take care of.
Interesting. Interesting moving forward as well. William Li, always a pleasure. Thanks for coming in tonight.
Thanks for having me.